Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name's Corey Kramer. Today, we are going to be revisiting Albemarle, stock ticker ALB. I've had a lot of questions about this one lately, so we're going to revisit it, and I'll share my thoughts on it. As always, this is not individual investing advice. This is just how I analyze stocks. All right, so for the past 4 days, we've had 4 buy videos in a row. And this is not going to be a buy video. I noticed today that I am long ALB still, and I'll get into that in just a second. But I noticed today, the fast graph will update later tonight, but over on CNBC that we have there, let me scroll down a little bit farther. Worst performers of the day in the S&P 500, Albemarle down 12, almost 13%, even farther than it is now. So this was one of the original buy articles back in late 2023. So we'll call it a year and a half ago, when I first relaunched the channel here on YouTube. And I've had quite a few questions about it since then, what I'm doing, and whether to buy more, right? And so that's what this video is going to be about. Okay, so where to start? I want to first start by saying that if I remember to, I'm going to put a link to the original video down in the description, because I went back and watched most of it just to see what I actually was saying there, make sure I didn't contradict myself too much today. And I was very pleasantly surprised that I basically had the same mentality or the same approach that I'm going to talk about now. That didn't have to be the case, but it did end up being the case. Now, the reasons are different. Basically, if we kind of look at what happened here, we had the post-COVID stimulus boom, with also low interest rates and stimulus in the economy, and people went out and bought a bunch of stuff, and lithium prices went up a lot. And because the demand for things that have batteries, like electric cars, right? If I were to put I did make a video between now and then where I said that Tesla, this was last summer, I said Tesla shareholders should be concerned about Albemarle's decline because it could show the weakness that's coming in Tesla. And even before what we have happening now, the earnings have been declining, right? So, and the demand has been declining for electric cars. Now, electric cars aren't the only place where lithium is used, but it's a big, end market for them. So we could tell if lithium prices are going down, probably the real story behind Tesla is the sales are going to go down, earnings are going to go down. So I did make that video, but that was mostly about Tesla rather than Albemarle. And so off this, we had a COVID bust, right? Everybody went out, they bought a lot of the stuff that they wanted to buy with their money, and then they didn't have any money and interest rates went up, so cars got more expensive, right? This is normal market things, only in a boom bust situation. So I knew that when we bought Albemarle, I knew there was going to be a bust. And I say that in the video, but I didn't know where earnings were going to settle at. I did say, if you go look at it, I mean, it really is kind of worth watching because you'll see the difference between somebody who understands the risks that they're taking when they're buying a stock, and then everybody go watch a bunch of, I haven't watched anybody else's, but I'm sure everybody else who was bullish all the way down were not saying analysts are going to be wrong about earnings and they're going to go lower, which is what I was saying in the video. Now they're much worse probably than I would have expected. I think I was talking about maybe they could come down. I mean, analysts thought they were going to be like up here, right? Like somewhere up here. And I was like, they could easily go back to just like 2020 level, like going into 2020. And that would be a major disappointment. Now, I thought the market was already pricing some of that in, and it was. But instead of maybe $6 a share, they lost like $2 a share. So it was even worse than that. So my two kind of notes of caution, and I'm still long the original position that I bought this, is down about 60%. But I made two big points, I think. One, that you want your position size to be relatively small because of the risks that were there, okay? 1% portfolio weighted position is what I took in Albemarle. So, at the portfolio level, I've lost 0.6% or something, roughly like that. And then the second thing is, knowing that this was a type of super cycle, if it did turn into like a full-on super bust or recession, which back at the end of 2023, recession wasn't like super imminent. There were rising risks, but a lot of those the government was kind of delaying and trying to help with. And then basically with the new administration, like the opposite came in, it was like the risks that were there, they were like, we're not helping with Jack. So that flipped. So that kind of moderating support, like underneath of the risks, disappeared. And then of course the big canary in the coal mine that we have here, is it canary or elephant in the room? Probably more elephant in the room, bull in a china shop, are the tariffs, right? And that's why it's the stock that fell the most in SP 500 today. Full-on trade war. I mean, I guess we have until midnight tonight before 104% tariffs go on China goods, but a lot of the stuff that's like, China's the bigger lithium purchaser because then that's where the manufacturing and stuff happens. So if their economy weakens, then that's why we see the lithium market just fall off a cliff, basically. So the trade war is what's pushing this extra, decline. But what I said in my video was, in a super cycle, look, if the bottom wasn't somewhere above where we are now, like $50 a share, then you really don't want to try to pick the bottom at that point. You want to wait for some kind of technical, what did I say? I said, some kind of technical bottom, like a double bottom, the stock price rising above the 200-day moving average, something like that. You want to have before you buy the stock, right? And we haven't really had that, not really even close. Just glancing at it, you can just kind of tell, because we don't know how bad it's going to get, and there can be little head fakes sometimes, like this one. But the problem is the risk of trying to pick a bottom is way more difficult or higher than how far the stock could fall. I mean, I would say, given the current situation, like, who know? Like, there's no way to predict. It could go to $1 a share, right? But it doesn't have to. It's just unknown. We really don't know. So when you're in a situation like that, if let's say it falls to, I mean, I don't know. I almost don't want to throw a number out, but let's say it falls to $20 a share. Well, I don't know if it's going to fall to 20 or 25, or 30 or 10. I mean, who knows? So if it falls to 20 and it comes back over a period of a year off that bottom, and then it's, it kind of puts in a technical bottom and it rises to 40, and we have a little bit more clarity on what's going on with the macro level. Okay, well, that's when you can come in and add that second position, right? Now, maybe it will be $60 a share. Maybe it only falls to 45. And then you could have bought it at 50 today, but it goes to 40 or 45, not that much farther down. And then it puts a bottom in, and you can't really tell until it gets up to 65. And then you're like, okay, that looks like a real bottom. We can maybe see even a little light at the end of the tunnel on the macro. So you weren't able to bottom pick it, all right, at 50. Well, so what? I mean, you're going to have an average cost basis of like 80. I feel like I've talked about this before too. And if the stock gets back up above 160 again, you get 100% return. And 160 is not the super cycle high, which is like 3 something. 160 is like maybe this. Yeah, like that's 180, right in here. So there's still a possibility you can get like, decent returns if you're able to add that second position. I would say the other thing that I didn't mention in the last video, because the market wasn't going into like a bear market. We actually did touch bear market territory today. I'm recording this on April 8th after the market close. There's other stocks to choose from. There was almost nothing for me to find like in the S&P 500 for the past year. I mean, one or two stocks. And that's why I don't have very many buy videos, and I have, hundreds of videos. And we've had 4 in the past 4 days because now things are actually reasonably priced for some companies. They're not super cheap yet, but again, you don't know when things are going to turn around. If we get the trade thing straightened out in the next month, the worst of the troubles might not occur, right? So, and you could miss out on some of the better opportunities, So starting to layer into some of those businesses makes sense. But this isn't the type of one that I would be doing that right now. It's at 50. It could go to 25. You just don't know. With a cyclical business that's losing money, whose supply chains are completely going to be probably screwed up for their consumers, for their end users, it's just not really something you want to double down on in that situation until you can see some sort of light, And then maybe there's a situation where it really does get hurt bad, like it's down at $10 a share or something. Well, now when you add a position, if it bottoms and comes up to 20, all right, well, you took your first position at 120, you took the next one at 20, you're down more like 50, which is kind of where it is here. And if it rises to only $100 a share, you can get good returns still, but it's going to be pretty dangerous. And I mean, my preference, even though we are the Cyclical Investors Club and I kind of specialize in cyclical businesses, they're not the best necessarily for most. It's a good to have a portion of your portfolio that you can trade them, partly because sometimes they're cyclical when the rest of the market isn't, or they give you more opportunities when the rest of the market doesn't give you as big opportunities. But if you can buy a long-term growth company during a horrible recession and hold it forever, basically, that's what you really want. The problem is we haven't had one of those for more than 15 years. It's been 16 years since we've had one of those. So you can't wait around forever for those opportunities either. So there's a place for both in the portfolio, but when you get the opportunity to buy a pretty high quality business at a pretty good price, or even a cheap price, that's not maybe quite as cyclical and not as risky, I mean, you want to do that first before you go buying like the Albemarles of the world. Ultimately, lithium is a commodity business. It takes a long time to get the mines and everything running. So I do think there's some advantages. I do think we're probably still in secular growth, global mode. Once, we see how this all shakes out, I don't think electric cars are going to go away. But it's still a commodity business, and that's why it's cyclical. So, not the first choice when you have a smorgasbord potentially. If the market drops another 30%, I mean, there's so many other businesses I would rather own than Albemarle. So that's something to keep in mind as well. You have to kind of prioritize the opportunity. You only get those kind of opportunities every so often. Albemarle opportunities can come along every few years, similar type stocks every 2, 3, 5 years, pretty regularly. And so go for the ones that are the rare opportunities first is what I would say. It doesn't mean I'll never add to it. I still have plenty of cash. So if we have a bottom and then things start looking better and I'm still sitting on like 25% cash and I look at Albemarle and there's a technical bottom, okay, that's when I will put that leftover cash in. That's kind of how I think about it. All right, if you found this useful, I have weekly picks over on Patreon for $25 a month. I have the full Cyclical Investors Club service on Seeking Alpha. Those links will be in the description. I also have a free tier on Patreon. So you can go over there, and I post some videos that I don't post here over there for free. Usually the smaller companies that people request, I take requests. They're back there on the chalkboard. It might be a little while before I get to some of those now that the market's falling. But once we get a lull, I will look at and see and fulfill everybody's requests. Thanks for watching, and I'll see you later.